3, 2, 1. Welcome to StockMarketFunding.com. What a wonderful Friday afternoon. It just so happens to be 8:40 a.m. Pacific Standard Time. The beautiful thing is, look what I have here. I've got a 250 put that made money off of the 77 pennies. I've got a 250 call that went up to 440. That's coming back down to the lows. I've got a 470 call here on Google that expires today. I've got another 470 put right next to it down here just in case Google wants to act funny and sell off. Well, I'll let that run and I'll cut that loser there. Now, in respect to the Apple trade of options expiration volatility, is that you must be aware that there's going to be an announcement coming out. Right now, I've got $360 million of negative money flow. People want to bail out, obviously. Obviously, it shows up in the money flow on 10.6 million shares. Now, I could care less what Apple does. I feel bad if the people did buy the phone and have a problem. I feel bad for them. But as far as the company go, I really don't care what they want to do here. I'm ready for a 250 call. Hey, I'm ready for a 250 put that we are, you could have bought down here around 85, 90 cents. And you'd be making, because we showed that trade earlier. So I'm ready for whatever that announcement may be. And I'm trading the expiration because I get a chance to get these prices. The best day of expiration is the day they expire. And that's where these low prices are made and the high prices are sold, and that's where the volatility comes from. As far as Google goes, here's your prints on Google right here. 465 up to 470, down $23.71 on the day. And you're at 470. Here's a 470 call. You're at 470, so here's a 470 put. One of these two are going to make a big run. The high of the 470 put was $6. The low was down here at $1.60. That affords me the opportunity to buy this at a cheap move in case we slip back below 470. And the 470 call, lost $25 a contract on Google right here. Here's where the contract's closed, 27.10, that 470 call. Google missed its earnings and down it went. But let me tell you, it's options expiration. And go back on StockMarketFunding.com. We have showed how we have done these every Friday of every expiration. And with our talent, we wait for the move to confirm itself, and then we just go with it. But we're looking, notice that we're looking on both sides of the market. And we're on both sides of the volatility so that we can use our SMF Pro Management risk management tools. And being in a risk management is understanding how to be a market maker in the equity prices here. Here's Apple, here's Google. 470 call, 470 put. Apple, a 250 call, a 240 call that hit 960 coming back down to the lows. The 260 put in the money just hit 1075. 670 off of the low. So when they gapped Apple up to 253.60, they took all the premium out of the 260 put and bought it and making a huge move. That's why we love doing what we do.